Ladies and gentlemen, this CPI report is a disaster, an unmitigated disaster. Our portfolios are down. VT my ET is down, what, 2%? Tattooed Chef, on the other hand, is only down 1%. Now, if you want to preserve your wealth, would you want to buy a broadly diversified total world index fund and a tax advantage account? Or would you rather buy a Tattooed Chef, especially during an inflationary environment? I argue Tattooed Chef will protect your wealth into the future. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake Boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we're going to talk about why Tattooed Chef is one of the best investments you could possibly make in an inflationary environment and in a recession. And if you don't know what Tattooed Chef is, you're probably a normal person. Tattooed Chef makes frozen vegan food. You can find it at Target. You can find it at Walmart. And I guess a bunch of other stupid places. I don't really care. Costco, maybe. So they make frozen vegan food, and they're pretty popular on the West Coast, at least according to some YouTubers like Jeremy LaFave. It ain't popular here, I can tell you that. In Virginia, oh yes. But Tattooed Chef is a new and exciting company. Now, we have to remember, ladies and gentlemen, the world is changing. Everybody is eventually going to stop eating meat. And instead of doing that, they're going to buy very expensive frozen food that has a vegan label slapped on it. Regardless of how healthy it is or not. It's inevitable. I mean, the entire world is just going vegan. It's not just a, specific niche market in a couple rich liberal douchebag cities. Not in the slightest. But we're going to talk about the company itself, okay? I have done a decent amount of analysis on Tattooed Chef. And no, I'm not talking about revenue my evenue growth. I'm talking about, does the company make money? That's all that freaking matters. The present value of all future cash flow is discounted at your required rate of return. Does it make money? No, it doesn't. Tattooed Chef is an unprofitable company. One of the biggest issues facing Tattooed Chef is their extremely low gross margins. Remember, gross margin is your revenue minus your cost of goods sold. Let's talk about what goes into cost of goods sold. Well, we got wages for people in the factory. We got materials that go into the Tattooed Chef Buddha bowls. And we have overhead, factory overhead that's allocated. Now, let's talk about each one during an inflationary environment. Is this good or bad? Wages. What happens to wages during inflation? Well, people eventually demand higher wages. So, inevitably, Tattooed Chef's cost of goods sold will continue to increase as the workers demand more and more wages because they're getting squeezed by inflation. Pretty cool, huh? Next, we have materials. The actual food that goes into the manufacture and construction of the Tattooed Chef Buddha bowls or whatever. Well, that stuff gets shipped from Italy, at least the last I heard. So they gotta grow it in Italy. That costs money. They gotta buy it. They gotta ship it over to the United States and put it into their bowls. Well, what do you think inflation is going to do to the cost of materials? Number one, it's manufactured. The food is grown in Italy. In Italy! And they got to ship it across the country. That's inherently more or across the freaking globe. That's inherently more charges and more expenses. And with inflation, you got to drive the stuff from point A to point B. And fuel's getting more expensive. All of these input costs are going up and up and up. Now, when it comes to factory overhead, it really depends on what's being allocated to that. I mean, if you have a fixed amount of rent, okay, that's not going to increase. But as inflation goes up, I guarantee you if they're renting or leasing a factory, that's probably going to go up as well. So all of these costs are going up. So there's going to be upward pressure on inventory costs and costs of goods sold. What does that mean during an inflationary environment? Well, even if your revenue grows, if your freaking expenses grow and they grow even faster, you're going to continue to have a very low gross margin and you'll continue to be unprofitable and burn money hand over fist. So obviously, right after we put a bunch of stimulus checks and child tax credits and unemployment benefits in people's hands because of the lockdowns, the natural thing to do is to invest in a low-margin, unprofitable niche food company that buys its food from frickin' Italy. Man, that sounds like a great investment, everybody. So if you go look on Tattooed Chef's balance sheet, I want you to go on stockanalysis.com and go to balance sheet and look at the quarterly change in cash on Tattooed Chef's balance sheet. And you'll see it's like the march to doom. Every single quarter, the cash balance gets lower and lower and lower and lower. And if you go to the statement of cash flows and look at cash flows from operations, you can see the negative cash flows are getting worse and worse and worse and worse. That means that Tattooed Chef is going to eventually run out of cash in the next quarter or two. How are they going to get the cash? Well, they just opened I believe a $40 million credit line. But here's the problem. The Federal Reserve is raising interest rates. I wonder if that's going to have an impact on the money, the credit that Tattooed Chef's management, the company, is drawing to sustain their operations. Okay? So, we have massive inflationary pressures on inventory costs, on cost of goods sold. We have massive negative operating cash flows, which are only going to be replaced by either taking on debt during a high interest rate environment or by issuing shares. That's the third problem. Benefit of Tattooed Chef, excuse me. Inflation generally crushes stocks like Tattoo Trucker's ball sack, okay? Why? Well, Tattooed Chef is not expected to be profitable for several years. So if you're doing like a discounted cash flow and you're trying to say, okay, what kind of cash flow, what kind of positive cash flow can I derive from this investment? Well, those cash flows are going to be very far out in the future. And if you discount, the further and further out you discount in the future, the bigger the number you're dividing that cash flow by, because you have a certain discount rate. And that discount factor gets bigger and bigger as you go out into the future. Well, if the cash flows are way into the future and the discount rate increases because interest rates go up, that factors into discount rates for stocks. Well, what do you think is going to happen to the stock price? The stock price will go down. And that's exactly what's happened, because the present value of the future cash flows are much, much lower based on the current environment. So what is Tattooed Chef going to do? Well, they're going to either draw on that credit line and pay massive interest rates, tons of interest, ruin their precious balance sheet, which is so amazing, or they're going to have to issue stock at a time when their share price is extremely low. And what's that going to do? Well, that's going to dilute the current shareholders very significantly. And it's probably going to tank the freaking stock price. Because when people see Tattooed Chef finally dilutes, like, look at very good food companies. Same freaking thing happened. Of course, people are going to start selling that freaking crap. Okay? So I just wanted to illustrate to you the genius of buying Tattooed Chef in an inflationary environment. It's going to go so well, ladies and gentlemen. All right, guys, that's it. Maybe you should consider buying an index fund instead of listening to freaking losers on YouTube. All right, back to work. Talk to you later. Cheers.